I completely sold out of one of my stocks and bought 3 more stocks. Today, I'll be going over what stock I completely sold out of, why I did that. I'm going to be talking about the 3 stocks I bought. I want to talk about the overall market for a little. I'm also going to show you guys my private portfolio and the stocks I own in there. So first, I want to talk about the market right now. According to the Fear and Greed Index, we are at a 32 right now, which is in the fear. Last week, we were at 21, which is extreme fear. So we're starting to see the market become a little more optimistic, less bearish overall. A lot of this has to do with the government shutdown coming toward an end. This was the longest government shutdown in history, which obviously when the government shut down, that's a bit bearish. But now with it coming towards an end, the market is starting to rise. And we saw that last week. So the market on Thursday and Friday dropped about 2 to 3%. The S&P 500 was down 2%. The NASDAQ at one point was down over 5%. And yesterday, we saw a recovery. The market was up over 1%. You can see that right here. The NASDAQ was up almost 2% yesterday. And today the market's opening up a little red, but it's still early and it's early in the week. So I'm interested to see how the rest of the week goes in the market. But I want to talk about this. When we zoom out over the past month, the S&P 500 is up over 2.5%. The NASDAQ is up over 3%. So we have moments of bearishness. We have moments of market fear. Now, as we look at the big picture and zoom out, we have a market that's continuing to grow. Now, we've had plenty of moments this year where the market has dropped a lot. The tariff crash was over a 20% drop. This past week, over a 2% drop in the S&P 500 and NASDAQ. But we're starting to recover again. And that's really what the market is. We are going to have times where everyone's bearish. We are going to have times when everyone's selling out. But as a long-term investor, when you invest in world-class companies over the long term, you're going to be all right. So that's kind of my message with the current market. Could we see a correction by the end of the year? Could we see a 5% dip by the end of the year? I think we can. Is it likely? I don't know. Regardless of what happens, I'll be ready to invest more money and invest in the companies I have high conviction for. Now, before we get into the 1 stock I completely sold out of and the 3 stocks I bought, I want to take a look at my YouTube channel. So I'm closing in on 800 subscribers, which is a huge milestone for me. My goal is to hit 1,000 by the end of the year. And I'm trying to become more consistent. I'm trying to post 2 to 3 videos a week for you guys. Updates on the market, update on my portfolio, stocks I'm selling, stocks I'm buying, everything. So if you enjoy my videos, any support helps me a lot. Okay, so now let's get into my portfolio. So I have 2 portfolios. I have one that I opened in June, and it was kind of my social media portfolio. It was the one I wanted to freshly start as I started my stock study brand. And then I have the one I originally started with. This portfolio I haven't shown you guys on any social media, but I'm up about 43% year over year. In this portfolio, I hold 7 stocks. I hold AMD, Amazon, SoFi, Nike, Symbotic, Google, and an S&P 500 index fund. You can see right here, AMD and Amazon takes up a huge percent of my portfolio. AMD is about 33% of my portfolio. Amazon is 25%. As we go down, SoFi and Nike are also big parts of my portfolio. SoFi is about 15%. Nike is close to 12%. And then we have a few more like Symbotic and Google. And then the index fund is a small part, but I've continued to sell out of that to have more cash to put in individual positions. I've had a lot of success in this portfolio. All time, I'm up about 60%. And we've had some big winners in this portfolio. AMD has done great for me, up almost 115%. SoFi has done great, over 100% gain. Amazon is up 25%. I'm still down on Nike, but I still have high long-term conviction for the company. Symbotic has done wonderful for me, up 235%, and then Google is up almost 79% for me. So this portfolio has done very well for me, but I am completely selling out of one of these stocks, and that stock is Symbotic. So if you don't know what Symbotic is a company that provides AI-powered robotic automation solutions for warehouses and supply chain logistics. So I originally bought into Symbotic in March of this year, and I actually made a video about my process of buying the company. It was my first video ever. It's a lower quality video. But I used ChatGPT heavily to help me research the company. So if you want to figure out how I actually found this opportunity, you can go watch that video. It's the first video ever posted on my channel. But one of the most attractive things for this company was their partnership with Walmart. That was a big selling point. I was really confused on why the stock was misunderstood by the market or undervalued. And a lot of it came to, I saw them growing revenue great. I saw their partnership with Walmart. A lot of their numbers look solid. They were just pre-profit. So I thought I had an opportunity here for over the next few years to find an opportunity where if they continue the partnership with Walmart, this stock will work out. So if I like the company, if everything has gone great so far for me, why have I sold out? Well, like I showed, I'm up over 235% on the stock. So you could say this is kind of a natural way of taking profits and repositioning this money into other stocks. But another reason is the valuation. Their PE ratio, their trailing 12-month PE ratio is at negative 1,000 right now. Their PE ratio right now is at 228, and their forward PE ratio is at 216. So the valuation on the stock is crazy, it's unjustifiable, and I think it's the right time for me to sell out, take my profits, and put it into other stocks I like. Do I think the company Symbotic has a great future ahead? I do. Are my returns going to be as great? I don't think so. This company has a market cap of almost $42 billion, and they're still pre-profit. I sat down and I was like, I'm a college student. I'm not making much money right now, so I need to find ways to continue to invest in these companies I have high conviction for, and this was the best way to do it. Take the profits I have and reallocate it into other positions. So Symbotic is a company I completely sold out of. Now, as we look at the rest of my private portfolio, what are my plans? So AMD is up huge for me, and I have high conviction for the stock. Could I see myself trimming a little of the stock? I could. Valuation is a little high right now in the overall market. There are some bearish indicators. I want to hold on for it for the long term. I think the next 5 to 10 years will be incredible for AMD. So I don't really plan to take profits, but I'm not leaving it off the table. Amazon is one I have incredible conviction for. I'm not taking any profits off the table for this one. I love the stock. I love the company. I have a few videos about Amazon. I'm holding for the long term. SoFi, that's another one I have super strong conviction for. I'm up over 100%. I could see myself taking some profits from here, but not right now. Nike, I'm not taking any profits, obviously. I'm down on the stock. I still have high conviction for it. And if anything, I'm looking to add more. Obviously, I sold out of Symbotic. Then there's Google. I love Google. I'm up a lot. I'm not taking any profits. This is another long-term stock for me. So as we look at this portfolio, I plan to leave it as is. I'm not currently adding to this portfolio either. Everything I'm doing is in the current portfolio I show you guys, the social media portfolio. But those are my thoughts right now. The only stock I sold was Symbotic, and that is to reposition that cash somewhere else. So where's that money going? Well, there are 3 stocks that I'm buying right now with that added cash. That first stock is a no-brainer to me. It's Duolingo. Now, I don't want to bore you guys with Duolingo because I've posted so much about it. I now have 3 YouTube videos about them. One posted about 24 hours ago. It was going a little more in depth about Q3 earnings. I have one 5 days ago that was fully in depth about the earnings. And then I have my deep dive I posted 3 weeks ago. So if you want to learn a little more about the company, I'd go watch those videos, especially the deep dive. But the brief summary of them is they are becoming much more than a gamified learning app. The education system is far outdated. Things are going to have to change, and they are in prime position to use AI and their learning behavior data that they're collecting every day from their 135 million monthly active users. They're in the opportunity to become a personal AI tutor for billions of people around the world. Now, like I said, I'm not going to go into more detail about them because I've posted so much about Duolingo, so I'd go check out those other videos. Now, my next stock is Adobe. Adobe is one I already hold. I'm down about 7% on the stock. I've been buying since about July. They're another one that I have a deep dive on, so if you want to check that out, it was posted about 3 months ago, but I'll talk a little more about them. A big reason Adobe has sold off, as you can see, they're down over 28% over the past 5 years. They've sold off because there is fear that because of AI, because of generative AI, you will no longer need to use Adobe Photoshop. You will no longer need to edit pictures on Adobe, edit videos. So people have kind of taken that as a way of a natural shift away from Adobe. We saw this with Google. We saw fear with Google in terms of Google search. ChatGPT is taking over Google search. We saw a big sell-off. Now Google has recovered, and no one's fearful anymore. Everyone knows that AI is helping Google tremendously, and I think we're in the same situation with Adobe. We have just yet to see the recovery. Now, over those past 5 years that the stock has dropped, when we look at revenue, it's continued to grow. Year over year, they're up over 10%. Over the past 5 years, there's a compound annual growth rate of 13%. So they're growing revenue double digits each and every year. So we look at this company and we see a stock that has performed very poorly over the past 5 years, yet we see a company continuing to grow. Everyone thinks AI is going to kill them, but revenue has shown year after year that AI is an accelerant. With their Firefly AI, which is their biggest plan AI, they have now generated over 29 billion different AI images. So people are using them. They're seeing more and more new subscribers purely for Firefly AI. So we're seeing AI bring in more users. More businesses are going to have to rely on Adobe to use their services. You see the NFL and NBA use Adobe. So overall, these fears are blown out of the water. Again, I'd watch that deep dive on Adobe because I feel like I did a great job explaining why I'm buying the stock there. But that is the second stock that I'm buying. Now, the third stock I am buying is another disrespected one, and it is Nike. So the story with Nike is since their 2021 highs, they're down almost 70%. So is Nike a dead brand? Why are they down so much? They've done very poorly. Now, Nike is another video I have a deep dive on, so if you want to watch that, I posted it 5 months ago, you click that. But I'll go into more detail about Nike. Nike faced two hard things. One, poor leadership. In 2020 to 2024, they had a CEO named John Donahoe. He had more of a tech background, and he tried to bring that tech to Nike. Nike took themselves out of retail stores and put themselves all online. So what happened was Nike started heavily discounting on their app, so people would buy online through the Nike app. Well, the retail stores that still had Nike, in order for people to buy the products there instead of online, they also had a discount. So then it was just a battle to the bottom. So if you look at it like this, the Nike app and the retailers, the Nike app had to discount so people would go there. The retail stores would then discount so people would go in the retail stores and buy them. The Nike app had a discount, and it just kept going, and it was a race to the bottom, to the point where Nike products were getting cheap. It was hurting their brand image. The margins were dropping fast, and it was really just a disaster. This process was just done incredibly poorly by the management. They got out of retail stores way too fast, and they really hurt their image and relationships with those retail stores. So then you have that part, the bad leadership, poor mistakes, poor decisions. And then in 2022, we saw record level inflation. Now, Nike is a brand that sells to the masses. When you're a brand that sells to the masses, you sell to everyone, but your price is a little higher than everyone else. You're not a Walmart brand or whatever you want to call it. When inflation levels are high and hurting most of your customers, you're no longer going to go to Nike and buy that $60 to $80 sweatshirt or those $200 Jordans. You're going to save your money and buy cheaper products. So all of a sudden, you have terrible decisions by leadership and you have terrible macroeconomic factors. Those two factors together really destroyed Nike. So why am I investing in this company? Well, in 2024, they brought in a new CEO, Elliott Hill, who had been with the company for over 30 years. He was with the company in 1988 as an intern, worked his way up, and then he recently retired, but he came out of retirement to become the CEO. The most promising thing about Elliott Hill was he was with Nike from the start. He worked alongside Phil Knight to build this brand. He saw what it meant to be Nike, how Nike was built, and they're really focusing back on sports. They are going sport first mode. Nike kind of lost its sports image. They're trying to return to that. They're trying to return to the roots that made Nike great. Now, there's more that goes in this story, and like I said, you can find that deep dive YouTube video to go over it. But one of the most promising things right now is Nike was in a, things are going to have to get worse now before they get better. So revenue was dropping, profits were dropping, margin was dropping, and that was by design. But for the first time in the comeback story last quarter, revenue broke even. So now we're starting to see the bottom. The bottom has already happened for Nike, and everything is going to start going up. So they're a company I'm continuing to buy. Like I said, in both portfolios, I own Nike, but I own a lot in my private portfolio. But I just think this comeback story is bound to happen. Everything is setting up to be great, and they're the third stock that I'm buying. So we talked about a few things in this video. The overall market outlook. We talked about the one stock I'm selling, Symbotic. I told you why. The three stocks I'm buying, I'm adding to, and kind of my future plans. That's really all I wanted to cover in this video. Again, nothing I say should ever be taken as financial advice. You know, I'm not a licensed financial advisor. This is for educational and entertainment purposes only. Before you ever buy a stock, you should always do your own research. And if I had to leave you with something before you left, it's that ignore short-term noise. We've seen in this market, it is very choppy. One week there's negative news. Everyone's talking about the AI bubble crashing. The next week, you know, we're green. Things are looking good. When you zoom out, the market will continue to grow. Are there going to be rough patches in this market? 100%. Could we see a crash soon? It's possible. No one knows what's going to happen or when it's going to happen. So the best thing you could do is ignore the noise, invest in world-class companies, buy low-cost ETFs, and invest for the long term. If you take out your emotions in this market and just buy fundamentally great companies, you're going to be all right. Again, I'm trying out a new style of video. I like this being a lot more conversational. I feel more connected with the audience. I feel like I'm able to talk more naturally. So if you like this video, I'd appreciate any feedback. And let me know what video you want to see next. Making videos about investing in finance can be hard sometimes because I'm only buying so many stocks each and every year. You know, there's really only been 5 or 6 companies this year that I could talk about heavily. And I know you guys don't always want to hear me talk about the same stocks, or maybe you do. And if you do, let me know. But if you have any companies that you want me to cover, any market news you want me to cover, I'd appreciate you letting me know. And all support is greatly appreciated. So that's going to be it today. I appreciate you watching this video, and I'll see you in the next one.